Hello traders, Gary Wagner here, approximately 11:30 here in Honolulu, 5:30 in New York, the second day of May 2012, and this is the daily report for gold and silver. The precious metals markets is closed for the break-in between the morning and afternoon session. Precious metals were down across the board today, with gold trading off about $8.50. 54.70, 53.70 bid-ask spread. The low was 46.80, high 63.80. Silver off about 32 cents, low 30.35, and high 31.15. As you can see from the last screen, we are down $8.50 today in gold. Most of that lower pricing has to do with a stronger dollar currently, with about $1.85 in terms of the price itself accountable for selling in the marketplace. Neither here nor there, we're back at a critical level. I've put up a couple of new charts so that we can take a look at it in a different way. This is COMEX Gold. This is the June contract, both weekly and monthly. And the reason for putting up these real long-term charts is as follows. On the monthly, and a monthly is something that I very rarely pull up, but when we take a look at this very long-term trend line, this support level trend line, you can see that it is really fixed off of these lows here, this low here, and this area right in here, as well as here. What you can see is a very interesting scenario that's brewing, because what we are seeing is this range really compressed, and you can really see it on a monthly chart. We go ahead and add our resistance as well as support in here. What you can see is we are quickly approaching the apex or the front of this triangle. 1, 2. If you look at the current price right now and compare it to this upward sloping support line, we're again very close to that. So we have been able to maintain pricing above the support line, but we're getting very close to it. As much as the monthly really shows us that critical area that we're at right now, you can also see it in a weekly chart. Again, the primary fixing points of these lows on our weekly is really here and here. That gives us our angle. And as you can see, we touched it again right in here and again right in here. We are trading above it, but again, we are close to not only the apex, but really the support area of this corrective triangle. Traders, you can see I've gone ahead and added a very long-term fib retracement. This is the beginning of this big rally back in 2008. Gold's trading just above 700 up to the record top. Reason for pointing that out again is I just want you to see in comparison to this 23% retracement that in fact we are still trading above that. Now, why is that important? Well, when we look at really the real long-term trend line, this support line right in here, you can see that they're about to really cross in this area. We have pricing above it, and we are at this point now really approaching the apex. Now, does that mean that we will get a hard break? Well, according to the theory, yes, we should. Doesn't always happen. I've seen duds or fizzles, in other words, coming to an apex and not really exploding or breaking out. But more times than not, we do see the market breaking hard once it reaches the apex. So we're getting very close, traders. We'll have to see what happens in this market. As far as silver goes, again, still trading under pressure. You can see that support line that I find to be very important is simply based upon this last large rally. It's a much shorter term rally beginning end of 2011 to about 37.60 on the top and the 61% retracement. As you can see, traders, we are right there. So we're in critical territory across the board. Now, we do have the jobs report. That will be coming out Friday, and I think that's going to give us a great insight, and we should see this market at that point react one way or another to that news. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.